All right, let's talk about an investment that's literally taking flight. Today, we're doing a deep dive from an investor's point of view on a major player in Latin American infrastructure, Grupo Aeroportuario del Pacifico, or as you probably know it, PAC. They run the airports that are the gateways for millions of tourists and businesses pouring into Mexico. So the big question for us is this a first-class ticket to growth, or should we be expecting some turbulence ahead? Let's dig in.
So here's how we're going to break it all down. First, we'll get to know the business, what PAC actually is. Then, we'll look at the bull case and the bear case, basically the good and the bad. After that, we'll tackle valuation, and we'll wrap it all up with a simple investor's dashboard, the key things you'd want to watch.
Okay, first things first. Before we even think about this as an investment, we've got to understand the engine behind the stock ticker. What does this company actually do?
At its core, PAC is a top-tier private airport operator. They're managing a whole network of airports, 12 in Mexico and 2 more over in Jamaica. And look, we are not talking small scale here. They're handling more than 62 million passengers every single year. This makes them a critical piece of the whole region's infrastructure.
Now here's where it gets really smart. Look at the mix of their portfolio. It's not all one thing. You've got these huge business hubs like Guadalajara, which is basically becoming the Mexican Silicon Valley. You have the totally unique Tijuana airport with a bridge that walks you right into San Diego. And then, of course, you got world-famous tourist spots like Los Cabos. This blend of business, leisure, and people just visiting friends and family, it creates this fantastic natural protection against economic swings. So here's a crucial point. PAC doesn't actually own the airports. They run them under these really long-term contracts, or concessions, from the Mexican government. Think about it. They get a 50-year deal that gives them a near monopoly in their area. The trade-off? They have to pour huge amounts of money back into the airports to keep them modern and growing. It creates a really stable, predictable business model.
So, how does the money roll in? Well, it's really a tale of two different businesses. On the left, you have what's called aeronautical revenue. This is the stuff that's regulated by the government. Passenger fees, landing fees. It grew at a really solid 20.9%. But the real story is over on the right. That's the non-aeronautical stuff, the shops, the restaurants, the hotels. That part is totally unregulated, and it absolutely exploded, growing over 41%. That right there, that is the secret sauce to their entire growth plan.
Okay, so with that picture of the business in our heads, let's build the bull case. What are the arguments that this stock is really ready for takeoff?
It all kicks off with this massive number, 43.2 billion Mexican pesos. That's about 2.4 billion US dollars. That is how much PAC is planning to spend on its airports in just the next 5 years. We're talking about increasing terminal space by more than 50%. You know, this isn't just routine maintenance. This is a giant bet on the future.
And that huge bet is designed to pour jet fuel on their #1 profit engine, that commercial revenue we were just talking about. By building brand new terminals, hotels, and tons of retail space, they're just creating more and more chances to get people to spend money on high-margin stuff. They're turning from just airport managers into really sophisticated retail operators.
And then you have this massive economic wind at their back, nearshoring. You've heard about it. Companies are moving their factories and supply chains out of Asia and closer to home, and Mexico is one of the biggest winners. So who's going to benefit from all that new business travel and cargo? You guessed it. Hubs like Guadalajara and Tijuana are sitting right in the sweet spot. PAC is literally the gateway for this huge economic shift. So let's just quickly wrap up the bull case. You have a huge expansion plan in the works. You've got explosive growth in the part of the business that makes the most money. You have powerful economic trends like nearshoring and tourism pushing you forward. And on top of all that, management is adding 34 new flight routes. It's a pretty powerful story, right?
But, a smart investor always looks at both sides of the coin. So let's flip it over and talk about the bear case. What could possibly go wrong here? What are the risks that could keep this stock grounded?
Looking at the risks isn't about being negative. It's about being prepared. So let's break down the main things an investor should have on their radar. What are the big concerns?
The risks really fall into a few big buckets. Number one, and this is a big one, is regulatory risk. The government can always change the rules. The business is also really sensitive to how the US and Mexican economies are doing. Then there's huge execution risk. Can they really pull off a $2.4 billion construction project on time and on budget? And of course, you've always got to watch currency swings and the fact that they rely so heavily on tourism.
And that regulatory risk, it's not just some abstract idea. The government is putting in something called a clawback clause. To put it simply, if PAC does too well, if passenger traffic just blows past all the estimates, the government can actually step in and take a slice of that extra money. This creates a lot of uncertainty, and it could put a ceiling on how high profits can go, which is a big deal for any investor.
So, this all brings us to the main event for any investment: valuation. We've heard the growth story, we've seen the risks, so now the question is, what is the market saying all this is worth, and is it a fair price?
Well, you can't value a company in a vacuum. You have to look at its peers in what is essentially Mexico's airport oligopoly. And what you see is pretty clear. PAC has the best revenue growth by a long shot, over 30%. But that performance comes with a hefty price tag. Its price-to-earnings ratio is around 26.6, which is way higher than its competitors. So the market is already pricing this like it's the best of the best.
And this really frames the whole debate perfectly. The bulls will tell you, hey, that premium is totally justified. You're paying for best-in-class growth and a superior business model. But the bears will fire back and say, whoa, not so fast. That price is way too optimistic. It's not taking that clawback clause seriously. Or what might happen if there's a recession?
But hold on, there is one more piece to the valuation puzzle: the dividend. PAC actually pays out a really attractive yield, giving shareholders a nice stream of income while they wait for growth. That definitely adds a level of support to the stock price. The only question is, can they keep paying that generous dividend while also spending that $2.4 billion on expansion? It's something to watch.
Okay, let's land this plane and bring it all together in our final section, the investor's dashboard. If you actually owned this stock, what are the handful of numbers you need to keep an eye on to know if your investment is on the right flight path?
It really comes down to these three things. Number one, monthly passenger traffic. This is the lifeblood of the business. You have to ask, is that growth still there? Number two, non-aeronautical revenue per passenger. This is the ultimate report card for their whole strategy. Is that number going up? Are they squeezing more money out of every person who walks through the door? And finally, number three, net debt to EBITDA. They're borrowing money for this big expansion, so you've got to make sure that debt level stays safe and manageable.
And that leaves us right here with the final question. PAC is making a huge, multi-billion-dollar bet on the future of Mexico. All the pieces are there for some serious growth, pushed along by these powerful economic trends. But that shadow of regulatory risk is always there. So, as an investor, the story from here is all about execution and deciding whether those potential rewards are truly worth the risks.